If your stock is appreciating faster than the S&P index, you can declare yourself to be victorious. And if you have an equity and you're underperforming the S&P index, you're normally thought to be wanting. And I've been public company CEO for 30 years, or no, since 1998 I was. And my investors would say that very simply to me. They'd say, look, if you can't beat the S&P, give us the money back. Because a brainless investor can take the money and buy the S&P index, and they can do that. That is the hurdle rate. And it doesn't take a rocket scientist to figure out that if you're buying T-bills and you're getting 3% after tax, and if the hurdle rate is 12%, you're underperforming by 9%. That means holding $1 billion of capital, you burn $90 million a year. Holding $100 billion in capital, you burn $9 billion a year in shareholder value. And so the big idea here is that in the year 2024, the SEC approved the first digital commodity in the history of the world, Bitcoin, and fair value accounting became optional. And in January of 2025, this month, fair value accounting for that digital commodity became mandatory. And we expect in the first week of the Trump administration for SAB 121 to be repealed, and that means that every major bank in the world will be allowed to bank Bitcoin. So what you have is a status quo for 80 years where a corporation could have all of their assets in real estate, in gold, in soybeans, in oil, or in treasuries. But of course, the only thing that looks liquid and fungible is treasuries. And it doesn't beat the cost of capital. And now Satoshi invents this new digital commodity. It takes 15 years for people to decide that it isn't tulip bulbs. It takes many years for the government to embrace it. And in the year 2025 is probably the first year where you could reasonably say the banks will probably handle it, the government's not going to ban it, and it really is a commodity. And so now if you run a publicly traded company, you have a choice between Bitcoin or bonds. And the bonds are minus 10% real yield, and the Bitcoin is plus 45% real yield for the past 8 years. And you might not be sure that you're going to keep getting plus 45% real yield, but I would submit to you that even if Bitcoin's returns collapse to the S&P index, and if you said it's just as good as the S&P, having a commodity that performs like the S&P is 10% better than using a bond. And so the real revolution in corporate finance for a CEO is you have the opportunity to recapitalize a company on a BTC standard instead of a USD standard. And what that means physically is you go from being negatively polarized to capital to being positively polarized to capital. Instead of being repulsive to capital, you're attractive. Wouldn't you like to walk into a meeting and be attractive instead of being repulsive when you walk in the meeting? And what that means to MicroStrategy is we just stumbled on this. We discovered this. We weren't trying to discover it. We were in the middle of the lockdowns, and we were kind of irritated, frustrated, desperate. And so we had $500 million of capital with zero return, and we thought we got to invest in something. Should we buy gold? Should we buy art? Should we buy real estate? Should we buy diamonds? Or should we buy crypto gold? And we thought, well, we'll buy some crypto gold called Bitcoin, and we inadvertently recapitalized to the BTC standard. And then, of course, if your capital is returning more than the S&P 500, you're creating shareholder value. How much capital can you gather? Like, if I'm a hedge fund and I say I return consistently twice the S&P 500, how much do you want to invest in me? The answer is, how much money do you want?
BlackRock, the global powerhouse with over $11.6 trillion in assets under management, has made a groundbreaking leap in its investment strategy. By nearly tripling its stake in Strategy, once known as MicroStrategy, BlackRock is reshaping its portfolio to align with the booming Bitcoin sector. With its recent acquisition of 11.2 million shares, BlackRock is placing a hefty bet on Strategy. But what does this mean for the future of strategy and the ever-volatile Bitcoin market? Welcome back to Investocracy Crypto.
Some people would say the reason you want Bitcoin is because the currency is being debased, and that's definitely true if you live in Lebanon or you live in Venezuela or you live in Africa. When the currency collapses in 5 years or 10 years, then obviously you want the Bitcoin. But there's another reason the Bitcoin price goes up, and the other reason the price goes up is because it's digital. And that just means that at the end of the day, if I can move $1 billion from New York to Tokyo and back again every hour, every second, every millisecond, there's utility in that. Digital books, digital education is 1 million times faster, cheaper, lighter than the real thing. And so the digital form of capital is valuable. Even if you ran the country perfectly and there was no inflation, but you could still program the money to move at the speed of light 24/7, 365, and put a AI that's 1 billion times smarter than me or you in charge, there would still be utility for that. And then the third reason it's going up is Bitcoin represents digital capital or capital in cyberspace. I give you $1 billion and I tell you buy stuff in Russia. And so you buy a bunch of stuff in Russia, and then what? The Russian government perfectly operates in every way, and then you stop the passage of time and nothing ever decays or grows old, and then I guess it's almost as good, but not digital. But the point is, the passage of time continues. Governments don't run efficiently. The mayor may not do what you expected. Stuff rusts. There's a hurricane. There's a fire. All of those things are entropy and chaos in the real world. So it's my long-winded way of saying Bitcoin is valuable because you escape the entropy and chaos of the real world. Bitcoin is valuable because it's 1 million times faster, smarter, cheaper because it's digital. And Bitcoin is valuable because nobody can debase it. And you only have to believe one of those three things to think it's going up forever. But of course, I think all of those things. It's just a better idea. And it's going to continue to appreciate in price with the passage of time, with the improvement of technology, and with the debasement of the currency, all three of which we can expect.
Strategy, formerly MicroStrategy, is not just timidly dipping its toes into the digital currency waters. It has dived in headfirst, securing 471,107 Bitcoin valued at a whopping $48 billion. In a market where volatility could give even the calmest day trader a heart attack, Strategy's bold move to rebrand itself with a Bitcoin-focused identity, replete with a marketing campaign launched on February 5th, raises eyebrows and adrenaline levels in equal measure.
So in terms of strapping your seatbelt in and going along for the ride, what does that look like? Especially, and I'll ask you because you're buying a heck of a lot of Bitcoin, and MicroStrategy moves with the price of Bitcoin.
Well, so first I would say volatility can be viewed as a feature or a bug. If I give you $1 billion on your balance sheet and you have it in bonds, the vol is 5. It's like putting $1 billion weight in your backyard is not going anywhere. It's sculpture. But if I fashion that sculpture into a flywheel and I spin it at 60 RPM or 60 vol, it's now a turbine. And you can imagine if you're spinning a very heavy, a 10-ton weight at 60 RPM, you can plug a machine into it. You can actually power a factory or power a company or power a city with it. And so volatility is energy. And with MicroStrategy, we actually run the company to create the volatility. So we have $45 billion of Bitcoin and we're spending at 90 vol, then we get a $100 billion options market that forms. And the result is it creates so much suction, so much energy. There are people that own my stock that don't know what we do, that don't know what Bitcoin is, that don't care. All they care about is I can sell the volatility. I bought the MicroStrategy thing. I'm getting 150% interest on it, whatever it is. If it doesn't go to zero in the next 3 months, I'm getting rich. Like That's the power. But you know, that's not unlike I spin a fan 60 RPM and I blow you off the deck, you know, of the ship, right? There's energy in these things. It's a turbine. So I think volatility can be harnessed. I would say if you're an investor, the right way for you to look at it is it's for long-term capital preservation. So if you have a portfolio of capital you don't need for 4 years, or more like ideally for 10 years, then the portion of your capital that you would hold for 10 years and invest, you put some of that into Bitcoin, you'll be fine. I don't think you should put capital you need for 4 days, 4 weeks, or 4 months. You shouldn't use, it's not a working capital thing. It'll give you a coronary and a heart attack. That doesn't make sense. But my last, you know, I got 2 other points. One is it's volatile because it's the most useful thing in the world. It's because if you need $10 billion of credit on Saturday night to short the market, you can get it from the Bitcoin network. You can't get it from any of your other assets. If you needed to sell something for $1 billion in 5 minutes, you can get it from Bitcoin. You cannot sell anything else on a Sunday morning in 5 minutes. If, on the other hand, you wanted to take a long position on Sunday morning after someone else took a short position Saturday night, you can do that with Bitcoin. You cannot do that with nearly any other asset. So it is useful financially, and that makes it volatile because anybody can express an economic opinion as hard as they want anywhere in the world, and everything is linked to everything. And my last point, it's going up 60% a year for the past 8 years. If it was going up 60% a year in a perfect exponential with a beautiful curve that you drew with your artist hand, if that's the way it happened, then people stupider than you, richer than you, would have all the money, right? If I'm telling you it's going up 60%, and if you do the work and you can understand why thermodynamically it is, like, why is the water flowing downhill? Why does the waterfall look that way? Because there's gravity, and the gravity is pulling it downhill. Why are people running from insecure assets to secure assets? You know, why does capital flow from one place to another place? Why would you sell your Venezuelan currency and buy dollars? Was that random, or is there a reason, right? If you understand the fundamental thermodynamic physical reason why the capital is flowing from 20th century assets to 21st century assets, from physical to digital, from financial to digital, if you understand that, then the best thing that could happen to you is for it to appreciate in a volatile fashion, because everybody else will be scared away from it. The 60% a year is still 60%, whether it's volatile or not. The difference is, because it's volatile, MicroStrategy is able to go from $1 billion market cap to $100 billion market cap because people are afraid to do what we're doing.
On the other side of the table sits BlackRock, a titan now wielding the iShares Bitcoin Trust, one of the globe's largest Bitcoin ETFs. Holding an impressive 48.7% of all U.S. spot Bitcoin ETF holdings, BlackRock's recent move ups its ante in the Bitcoin playing field, affirming its confidence in the burgeoning digital currency market. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
If you like money, if you need the money, if you're willing to take risk and you're willing to bleed to get the money, then Bitcoin will give you the money, right? But those are the people that deserve it. If you're just rich and arrogant and you only take risk-free investments and you just expect to stay rich, then, you know, you really want to help them? Do they need help, right? I mean, I don't think so. So I think the volatility is a feature that's a benefit to an investor. It's a benefit to a corporation. It's a natural characteristic of a life form. It's alive. It's vital. It's volatile. I think that there are 2 big ideas in corporate finance that are traditional, Morgan. One, volatility is a bug, and I think no, volatility is a feature. And 2, and I'm going to say this in a hyperbolic way, but to make the point, I think conventional corporate finance treats capital as it's toxic. Like capital is toxic to the corporation, and I think capital is virtuous.
Currently, Strategy holds a strong foothold with a share price now bouncing back impressively, fueled by its monumental Bitcoin reserve and BlackRock's unmistakable endorsement. The stock is positioned with high potential for growth, buoyed by its ambitious 21 by 21 plan, signaling robust long-term prospects. But will you take part in this electronic gold rush, or will you watch from the shores? Share your perspective. And finally, if you would like to know more about cryptocurrencies or specifically Bitcoin, go ahead and click on the next video on your screen. See you there.